Crude oil prices, they're currently tanking back below $77 per barrel. Gold prices, they've now broken below $2,400 per ounce. Silver prices, they've also now taken out $28 per ounce. We're seeing it break all the way back down towards $27.60 per ounce. So what could possibly go wrong when we have speculators? Over 91% recently, they've gone long using outdated trend trading systems to try and buy a momentum, which does not work with trading these commodities. We discussed it with you previously. Gold, the positioning here, again, over 90% of speculators, they've gone long, getting a lot of FOMO. When gold prices broke out last week to all-time record highs, it's been the same on silver. As we mentioned, the metals here, they're just going to be a chop fest, and it's going to be a lure to get more traders in, to FOMO in, buying at the top of the move, getting very excited every time gold and silver start to get this acceleration back up towards the swing highs. This is not where you want to be buying. You want to be buying when there's panic in the market, when there's lots of fear, exactly actually like we're seeing at the moment, particularly on oil. And of course, you know our position here on oil. We have been selling short oil. $83.30 per barrel, we're selling short oil, and also at $82.75 per barrel. Now, as you know, last week we're on a 1 week break from content. The previous week we talked you through massive opportunity there to be selling into crude oil above $82.50 per barrel. Right now, just over two positions here. We're up over 1,250 points profit on our sell short. That's only on oil, and we've also banked this week 500 points on palladium. We talked you through that opportunity just on Monday's report when palladium prices, they broke down to $875 per ounce. Just on Wednesday, palladium broke out to $931 per ounce. So we took a quick 500 points profit off the table. Alongside that, we've of course made sure to lock in profits on this sell-off here with oil. Our sell shorts are doing incredibly well. So at the moment here, just within those couple of trade opportunities on oil and also on palladium, of course, we're banking just under 2,000 points here on these positions. So of course, you know that calculation. Every one lot contract you be trading, that's going to generate you $20,000 of profit. Every 10 lot contract you be trading, if you stacked into the positions, that's going to be banking you over $200,000 of profit. Again, there's always going to be back-to-back opportunities here, but you have to be patient at certain periods here. We've again seen a lot of traders, they've basically missed some of the massive moves that we've had over the course of the last quarter with gold, with silver, with palladium, with platinum, with crude oil, and as a result, they've just gone in FOMO'd in, they've utilized outdated systems here, which give you absolutely no edge at all in the market. Again, you really need to be utilizing research data and statistics and really understand the right points in the market to be getting involved, to be buying, building out positions, and also when to bank your windfall amount of profit as well. So overall, the strategy here is very simple. As I mentioned previously, gold and silver, they remained in a chop fest. What I'm waiting for was for those speculators to get liquidated. So what are we seeing at the moment? Just bring up a gold chart, bring up a silver chart, you will see massive sell-off that we've seen over the last 24 hours. All of this we talked you through previously, that the overall positioning in the market was incorrect for the price to keep going higher. It's not going to be that straightforward that you get over 90% of speculators, they just buy at the top of gold and silver and they're all going to make money together. That's not how it works. So the trap has been set. Now we're starting to see the liquidations take place. So this is essentially setting up for the sell-off to then capitulate. And then there's going to be opportunities once the dust settles, once we've got the lows that we've been waiting for, once we get the lower prices that we've been expecting, then it's going to be a massive opportunity to buy in nice and low and then capitalize on the next impulse move higher. As you know, with palladium, I like it sub $900 per ounce, aiming for best possible price. I like it even more if it was to break all the way down to $850 per ounce or lower. That would be fantastic. Platinum at the moment, it's getting more interesting at the moment. It's around $950 per ounce. If it can also break back down towards its price swing lows, that would be ideal. Gold and silver, I'm still waiting for additional speculators to get flushed out of their positions. You can see it's taking the elevator down right now. So again, I'm just waiting in the sidelines to pounce and get really nice low opportunities to get in nice and low on those markets. Oil, as you know, we're selling shorts. We're making lots of profits on the sell side here. We gap lower on the Sunday open. Again, massive trap for traders just to try and get a gap filled there. The gap didn't get filled. It continued to tank. So we're staying selling short this market. And of course, palladium, we've already managed to bank 500 points just over the last couple of days here, from $875 back to $930 per ounce. At the moment, it's coming back down towards 900. Again, I like it below 900, looking for best possible price for additional reloads on this market. Ideally, if it can get back down towards 875, 850 again, that would be perfect. This really does come down to understanding where we are within the market cycle. Next week, we have a lot going on. We've got the FOMC statement on Wednesday. We're hearing from the Bank of England on Thursday. And then on Friday, we've also got non-farm payroll. This is going to provide more big opportunities here, both from an exit liquidity point of view, so banking profit into those catalysts, but also looking at opportunities if we do see further cascading sell-offs into those news items to swoop in and buy nice and low, just as we're seeing speculators get flushed out the market. This is where, of course, you want to swoop in and stack out positions at much better prices. So with that, this is, of course, where it does come down to utilizing data, statistics, market intelligence. It's really important to understand the real-time data-driven cycle for each commodity. Further compound that with the capital flows in the market, the intermarket correlations, the ratios, of course, how the banks, the institutions, the money managers, the speculators, how they're all positioned in the market in real time. That will help you massively. Then further compound this with the fundamentals, the geopolitics, the macroeconomics, and of course, ditch those outdated trend trading systems and pure technical analysis strategies, which won't give you any edge in the market. It's 2024. The age of data. And of course, this is where you do want to be utilizing a professional, research-driven approach to the market. So with that, if you would like to join our community of successful traders, learn the professional, research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.